So current investments, as the name itself suggests, basically what we mean by current investments is the investment which is held by the organization in order to dispose it off in a short period of time, that is less than within a year. So it is readily realizable and intended to be held for maximum 1 year from the date of investment. So it is basically a short-term kind of an investment, and the valuation of this current investment is always done at cost or fair value, whichever is lower in the balance sheet. Now, cost anyway is a simple term. Whatever cost we have incurred to to acquire the investment, that is basically the cost. What is fair value? Fair value means a value for which the investment can be exchanged between a knowledgeable willing buyer and a knowledgeable willing seller in an arm's length transaction. So assuming that both the parties are not related to each other and they do not have any stake or interest in each other, then it is basically arm's length transaction. And for arm's length transaction, what will be the value at which this investment can be exchanged between the two parties? That is basically the fair value. So if I want to sell the investment, how much money I will get, or if I want to buy the investment from some other person, how much value I will get, that is basically nothing but the fair value. In most of the cases, the market value, which is the prevailing market price in the industry or in the stock exchange, or the net realizable value, that is basically the value you will get after selling the investments, that is considered as a fair value in most of the situations. Market value is the amount. Now, we said basically in most of the situations, fair value means market value. So let us understand what is market value. So market value is the amount receivable on sale of investments in open market, net of selling expenses. That is basically the market value. So if you decide to sell the investment, whatever selling expenses you may incur, net of that, whatever amount you will get, that is basically the market value. So this market value or the fair value and or the cost, whichever is lower between the two, that is basically the basis for showing the current investments in the balance sheet. Any fluctuation in the value is to be recorded in the statement of profit and loss. So any value going up or down has to be recorded as part of the statement of profit and loss. So if the value is going up, it will be the profit, and if the value is going down, it will be loss.